Hey, good afternoon, everybody. We're discussing the charts today in the chat, and looked like it could have been a shift day. We had a nice push up, but couldn't break through that resistance. You can see the resistance even on the SPY chart, on Rob's chart there on the daily. It looked like a pretty decent day. I actually did really good today already on a couple of trades. Just waiting to see what happens, how we do in the afternoon. Get that little gap to fill there on SPY, as you can see. And similar on the other charts that we're coming into key resistance, but if it busts through, there's a lot of empty air overhead. So watch for that. I'll let Rob take over. Hey, Sam, good to see you in here.
Hi. Thank you, Frank. Good afternoon, everyone. Welcome those of you that are longtime regulars like Sam, and those of you that are new maybe. Glad to have you guys join us for another Wednesday webinar. Like Frank said, it's an interesting week, right? It's a holiday week. Typically during these weeks, you expect benign action. You expect us to just sort of drift upwards, and that has not been the case. We're finally seeing a little bit of green action today, but for the most part, it's been a pretty ugly week, and it's been a pretty ugly start to November. Well, not start to November, but the middle of November after an ugly October. So overall, a lot of ugly action, right? And let's go ahead and look at the four major markets and see if we can figure out what's going on as far as from a technical analysis perspective, where we are. Should we continue going down from here, or have we decided to finally settle up and form a bottom and start trying to trade sideways or up, or what exactly is going on? As usual, we're going to go ahead and take a look at the four major markets. Then we're going to look at the U.S. dollar, oil, gold, and silver, and then move on to the chart requests. Those of you guys that are in here, if you have a chart request or a chart that you want to look at, whether it be a chart that you're already trading or one that you want to get into, maybe you're looking for an entry point, maybe you're looking for an exit point on something that's going against you or going for you, just let me know and put it in the questions tab, and we'll go ahead and take a look at it when we roll around to that part of the webinar. But let's go ahead and get started with the S&P 500. We're going to look at SPY, the ETF. And as you can see, here's a little gap Frank was talking about. That gap, of course, created by yesterday's big gap down, which was in itself a continuation of the ugly move that we had on Monday. We just sold pretty much straight down Monday on what was expected to be not necessarily a strong bullish day, but a mildly bullish day where we just sort of drifted up and started testing our 200-period moving average and possibly even kind of coming up and testing towards the upper ranges where we've really had a lot of volatility come into even in October. Back in October, we had that big drop down to 280, and then from there we've really been going back and forth pretty strongly as we get this conflict between buyers and sellers, between the bears and the bulls, where the bears expect us to finally roll over and expect a bear market. I've seen a lot of pretty strong comments on my Twitter feed lately about how ugly the situation is and how we should be just dropping like a brick. But there's still a lot of bulls here, right? There's still a lot of buyers that, and again, if we take a look long term, there's still a lot of bullish sentiment that's sort of tied up into this. We've been going on a pretty strong upward trajectory for a while in the markets, and while this year now you can see pretty clearly has been trading sideways, there's been even within that respect, there's been a really strong trend to the upside. So there's still a lot of buyers that are still trying to figure out where they want to get back into this. And meanwhile, we've got a lot of supply and a lot of sellers that are coming in saying, no, this run is over. We're crashing. We're coming right back down. And that conflict is what has caused a lot of the volatility this month and last month, and has really helped Frank a lot, right? Because that volatility has helped him out as a day trader. For swing traders, for you guys that are maybe trying to take directional trades, that volatility has really hurt, right? Because every 2 or 3 days you get a strong move in one direction and it's immediately faded and turn around and it goes back in another direction. And overall, just a lot of charts have been really damaged pretty strongly when you go ahead and take a look at them and look at where their candles are with respect to a lot of their relative spots. Now, I will say this. Where we are right now, even though technically speaking, we're pretty much in the same place that we were to open the year, right? And the year, when we opened the year, if you guys recall, back in February, things were looking pretty negative. But overall, underneath the surface, a lot of charts were still looking pretty good. We had a lot of charts that were still trading over the 200 period, over the 50 period. We're still in decent uptrends. And despite the fact that the market was really starting to settle into what look like a rollover, there were a lot of still pretty decent looking trading opportunities. That's not the case right now. Right now, there's a lot of charts that have taken significant technical damage on their charts. And despite the fact that we're in the same place, I would say we are in a little bit more of a negative environment than what we were at the start of the year. There is more potential for us to head to new lows than I think there was back in March and February. And so I understand the sentiment, the negative sentiment of where we are in the market. However, that being said, I also feel like there's still a lot of bullish sort of like vibrations that are left that have not completely been taken out yet. And I think that there's still people waiting to buy. And I still think that there's potential for a market move to the upside, particularly as we head into the holidays, even though we've already sort of negated that a little bit with this week, which typically, as I said, Monday, Tuesday, Wednesday this week is supposed to be a pretty decent day. That has not been the case. And as a matter of fact, at this point, what we're seeing right now is a pretty lukewarm bounce to begin with as well, at least on the S&P 500. The small caps are painting a different picture, but the other three indices are all sort of having mediocre bounces and setting up in a situation where we could be still setting up to just kind of drift up and touch the top of this and then just roll right back over. All right. If we look again at where we stand here, right? We have support on the S&P 500. We did sort of bottom out, and we bounced up, and then we failed. And at this point, we have two different types of scenarios here, right? We have a potential double bottom. And what I mean by potential is it has not completely set up yet. If you take a look at what's going on here, I'm going to go ahead and put some trend lines here. We've got 1, 2, 3 moves, right? We've got a down move, we've got an up, a down, and now we've got a long way to go to sort of complete this, right? And this is really volatile. I tend to not call these bottoms when they're this volatile. It's basically half of the previous move, but there is a potential for this sort of a move, right? We shot down, came up, shot down. If we can come right back up to 280, we have a possible double bottom in play here, where once we break above 280, we could say, yes, this was another false breakdown, or not false breakdown, but another false sort of threat of a bear market, and we can kind of come right back up and start the new year making our way back up to highs. Now, that of course is conjecture right now, and there's a lot there's a lot of theory behind this, because the S&P 500 needs a lot of work to do that. But that is a possible scenario. And if that happens, then in the end, yes, we had another shakeout, but overall there were still enough buyers left to try to push the market upwards. Not necessarily saying that that's the perfect scenario that's going to happen and the most likely scenario, but I do want to point out that there's still potential for us to rally here. It's not necessarily all negative and where we're just heading straight down. Now, that being said, there's also the potential for this, right, which is we come up and bounce right up to here where we struggled on Monday, and then we turn around and we just roll over and go to new lows and break the support that we had. And that is a possibility as well. And that is probably what the consensus is thinking, which is, I mean, maybe the best reason why it won't happen is because I think more people are thinking this is going to happen. But that's not enough for us to go on as far as technical traders. So overall, what I would say is that we're not in a good spot to go ahead and take a lot of trades. One of the things we do when we go through these Wednesday webinars is not necessarily always analyze the markets from respect of trading these ETFs, but just to try to understand what kind of environment we're in and figure out what kind of trades we want to take. And for those of you that follow me on patreon.com/stockdarts, you'll notice over the last week, a lot of the trades I've been taking are very different in flavor from what we've done all year, right? I posted a couple of different types of options plays where we're trying to sell volatility and take advantage of this incredible increase in volatility and in premium that's come into the options. Some of it has been adding some short plays to our watch list, short plays that honestly, I haven't taken short plays since 2008, 2009. And more than anything, just because the market has not been in a place to offer them. It's not like I have some philosophical issues or idealistic issues with trading short. It's not been the market to trade short. And I'm finally saying, you know what, we can trade short. We can trade to the short side in this market. And as you know, so overall, I've been exploring different opportunities and different avenues of trading, because the regular style of trading of just buy something on the dip or buy something as it breaks out, it's not working right now, and I don't anticipate it starting to work with any more sort of consistency, at least for another month or so, as we continue to sort of chop around and maybe hopefully complete this double bottom, but more likely than not, just sort of get back into here and start testing these areas around the mid 270s and the lower 280 as we hopefully retest the 200 period moving average. And so what I'm saying right now is that the overall environment is not that great, but we're not at a point where we need to totally panic and close out all of our positions, right? I don't think that we're there yet. I think we're getting closer. If we lose this year's lows, then I think we need to be very careful about this market and start to really reduce our risk even more substantially than maybe what we've done recently. And that would be the next point, is if we start to lose these lows here, this 262, 260, this wick down here, we start to head towards the March and February lows and lose those, then I think we need to start being a lot more careful about not just what we're trading. We're obviously already being very careful about what we want to trade, but a lot more careful about reining in risk and maybe closing out some longer term positions or protecting with puts, and being even more cautious. I don't think we do that this week or even next week. I could be wrong, but I don't think we do that. I think that we bounce up into today's close and into Friday, and maybe come up and start testing this 270 to 272 area. And then from there, we'll see what happens as we close out November next week. But that's kind of what I'm seeing right now. And again, that's the picture of the S&P 500. We're going to see a slightly different picture when we get to the NASDAQ in a second, which it's actually a little bit more bearish, because we've already sort of come down below the lows from October. And while we haven't tested the lows of the year, we're actually, and this lends itself more to the scenario, instead of a double bottom, that other picture I was telling you, the more bearish one, where we just kind of come up, bump our head into some resistance, and then continue heading down, sort of the dead cat bounce, right, where you just kind of break new lows, you get a relief bounce, but it only comes up to test prior resistance, and then it heads down. And of course, this big wide area here is where we open the year, right? So we're down on the year. We're negative on the year on all four indices. And the Qs right now are coming up and bumping their head against this. And this would be, again, the more bearish scenario that we played out on the S&P 500 looks like the more likely scenario on the Qs. So while the S&P 500 is sitting above support and looks like maybe it wants to bounce and test higher, the NASDAQ is rolling over and looks like it wants to maybe flag here and then roll back over, right? So very, very different picture as we look at the tech names. And of course, there's been carnage across the board on the FANG stocks, right? If we go ahead and we take a look at Apple and see where it's doing, just gap down. We had a gap down island, now we're gapping down and forming another island, rolling over, all the moving averages swooping down. Really ugly action that we're seeing on Apple. We're seeing the same sort of action on Facebook. Amazon, to a certain extent, is doing the same thing. Not quite as ugly, but it's doing the same sort of thing. And Google, right? They're all sort of struggling, right? And it's reflected pretty clearly on the Qs. And the weird thing is that typically a lot of these, Amazon and Apple in particular, they tend to do very well into the holidays. They tend to sort of rally into Christmas, and we're not seeing that. Let's see what happens again with Friday. Once we see Black Friday, see what happens with retail, see what happens on Monday, and maybe that gives them a lift, or maybe that's just the last kick before we really roll over. But I suspect that we probably get a little bit of good news, and then maybe we get a little bit of a bounce coming into them from that respect. But overall, not really a lot going on there. Now, we do have, for those of you, again, if you follow me on Patreon, you'll know we have a trade on Amazon that I'll update tomorrow depending on what it does, which had a pretty ugly scare with the gap down or with the move down yesterday. But the position itself, it was a calendar spread, wasn't down enough to really force me out of the trade, even though I expected to stop out on anything below 1475. But it was a short-lived drop, and we rallied pretty quickly in the morning to get back above that level. And so you guys, if you follow me, you'll know that I'm in a modified play here on Amazon, where it's slightly bullish, but not that much. I just expected this thing to sort of sit around in this area. But it's a play that I'm anticipating on turning to a more bullish play coming into next week. So I'm slightly bullish on this. And it gives you, if anything, shows you that I have some hope that the market can rally here. But overall, I would say it's not really sitting in a great place. And if I didn't have the flexibility of trading with options, I would have stayed away from that trade altogether. And where we stand right now, again, is not looking that good on the Qs. And what we really want to see is we want to get back above the year's open for starters. And then instead of a double bottom, which of course doesn't really exist right now, what we want to maybe do here is come back and do something like this. Just kind of come up, maybe bounce into the 20, come back down, and then hold above 160, and then maybe try to run into December, start to maybe do something like this and start to make our way back up. And I think if that happens, then we could get a Christmas rally, not to highs, but at least to stabilize. At this point, what we want to see is we want to see a holiday rally to stabilize the markets, not to push to new highs. And if that happens, then we will have ended the year in what I expected to start the year, if you guys remember back in January, which was for us to trade sideways. I think that we are in a position here. It's very similar to what we had in 2015 through 2017, where the market was basically transitioning to a sideways base, which, if you guys remember, again, the terminology I was using for this was action and reaction, right? Typically what happens in a market of equities, whether it's the stock market, whether it's a particular stock, is you have an action, typically a move up or down, and then it's followed by the reaction to that move, which is typically a consolidation range, right? So we had a strong action up, and then we had a sideways reaction, right? Then we had a strong action up, and now this year has been spent as a sideways reaction. Now, of course, this is on a large time frame, but this happens across all time frames, big or small. And so you often have these action and reactionary moves very often. You know, that's where we get and obviously this chart has a lot of trend lines because this year we've spent quite a bit of analysis on it. And you'll often have these moves, right? You have the strong action, then you have the reaction, then you have the strong action, then you have the reaction to it, and you go back and forth, right? And this entire year has been a reaction to the incredibly strong rally that we had last year and the year prior to that. And we've reached the point where hopefully we're coming close to the end of that, but this could be a 2-year thing, right? It could be that we spend all of next year doing the same thing. And also, just to point out, these bases and these consolidation ranges, they could resolve to the downside. They don't necessarily always resolve back in the prior direction. So I don't think that we're out of the woods. I don't think we're at a spot right now where I could say with definite purpose that we are at the bottom of our correction and ready to bounce back up, or even say that we are just setting up for a sideways move to rally next year. I don't think that that's. I don't think we have enough information to go ahead and conclusively say one thing or the other. And so I still think that we are in a spot where we need to be more careful and be very cautious about how we want to go ahead and approach these trades over the next week or so. And hopefully if things clear up, by next week we should have a better picture of whether we should maybe take some bullish plays into December. But at the moment, I think that we need to wait and see how we close out this week and how we start. I think that once we go through Friday and Monday, I think by next Monday afternoon, we should have a much better picture of how we want to approach December as traders. Now, if we look at the Dow Jones, and we can see this one's a little bit more like the S&P 500. And what I mean by that is we're not actually below support yet. We again have this pseudo double bottomish type of pattern where we came down and tested 240. We came up and then we came down. It's not quite the same, and I hesitate to call it that because, again, we actually bounced higher. And some traders would even say this. They look at this like a head and shoulders, which I would completely disagree with. But they'll say, well, look, we've got a shoulder and a head here. But head and shoulders is a topping pattern that you find at the top of a range, and on top of that, the shoulder and the neck always line up, and that's not the case here where we came down and retested and then we headed lower. So I would not call it that, but we do have a mix of patterns here where it's just a neutral, I would say a neutral range right now. And what we want to see right now, of course, is the same thing that I pointed out in the S&P 500 is we want to at least come up and retest the 200, fill this gap that Frank pointed out from yesterday, and at least start chugging along these moving averages and just hold up. At this point, we're just holding for dear life. We don't want to roll over. We don't want to print new lows on the year. And we certainly don't want to go down and start the holidays on a negative note, or any worse than what we've already done. And so overall, again, the only bullish piece that I could take out of this is that we haven't formed new lows yet. That we haven't printed lower lows than October. So a lot of what I just said for the S&P 500 is going to stick for the Dow Jones. We want to just come up. There's always the possibility that we mimic the NASDAQ and we just come up and retest, fill the gap, maybe test the 200 period, and then bam, just roll right back over, right? So that's the more likely bear scenario. I think that if we are going to print new lows, we probably do it in this manner rather than just gap down. And say do this tomorrow or Friday. I think more likely than not, we fill the gap and then roll over rather than do this. But again, hopefully we fill the gap and continue pushing upwards. But I think that I don't expect us to print new lows this week. Again, we only have, we're closed tomorrow, and we only have Friday. And I don't know if enough data will be out on Friday early in the day for us to really worry about that. But there's a chance that we do that, but I think more likely than not we drift up and test this moving average, and then depending on how we start next week, that'll tell us whether we're going to head back and push to new lows or whether we're going to just chop around and start trying to make our way higher and set up for a Christmas rally, which again, as I said, is a Christmas rally which at this point is not looking for new highs, but just looking to stabilize and at least graduate and finish the year positive. I imagine there's going to be a big push for funds in general to try to leave the year on a positive note, which means finishing above this level, which is funny because we've been watching this level all year long. There's basically the starting point. On all four of the major indices, we've been watching to see where we are with respect to how we open the year. And I think that this is going to be an important point throughout the rest of the year or throughout December, where we basically try to stay positive on the year and finish the year green. And I imagine that that's going to be a big point for the mutual funds to try to get the markets back up above that. So that's going to be a spot that we want to watch as we sort of move forward into December. Now, here's the small caps, IWM, and we're actually having a really good day today on the Russell 2000. This, of course, is what Frank was talking about earlier about how strong we've been with the Russell, and having a nice day. But overall, still relatively speaking, sort of weak compared to the other indices as far as where we are. Again, the white box here is saying, and I'm going to get rid of these other ranges. Just obviously these charts are getting really messy. I probably need to clean them up a bit. And we're still quite a bit below the year's open on this, but we're doing a good job again of forming that sort of a double pattern, a double bottom pattern. Now, again, I don't think that it's really a double bottom just because of the nature of the way that we've done it, but you could look at it as what we're trying to do here, right? Which is we've come down and we've tested 145 twice, and again, this would not really be completed till we got back above 158, and then from there, if we were able to move past that, I think that would be a nice bullish scenario that would actually lead to a move back up towards the previous highs. That's a long ways away, not something we really need to concern ourselves with right now, but that would be ultimately, if we could do that to start to close out this year, that would actually bode well for the start of next year. Whether that happens or not, I think is still pretty much up for debate, and I think the market's got a lot of work to do to prove that it can do that. But that would be a very nice scenario. Now, again, the other possible scenario is, of course, let me get rid of some of these trend lines again. We're getting so many of these. is that we just come up and retest some of these lower areas and then just roll over, right? And I think if that happens, obviously that sets us up for a very poor situation to start next year and a poor way to close out this year. But it is a possible scenario. And it just depends. Now, again, I like what I'm seeing out of the small caps. We're starting to see traders take risks because the small caps are outperforming at least over the last few days. And even on Monday and on last Friday, I was noticing that there were some small caps that were starting to move a little bit ahead of the rest of the indices. And that could be a sign that traders are willing to gamble here at the lows, thinking that there's more potential upside than downside. Again, it's not a lot to really hang your hat on, right? But it is something. I think if the small caps are doing better, at the very least, if we're going to sit here and put our little psychology cap on and try to analyze the market, traders are taking risks. And again, it's not a lot, but they're looking at upside instead of downside because it's not the Dow Jones that's ripping higher, right? It's not the Dow Jones that's coming up and printing a big green candle, which typically happens when traders just want to hold their safe names and not take any risks, right? So the fact that we're seeing IWM with the biggest green candle today shows that some traders out there, not all of them, well, obviously a lot of traders are really gun shy right now, and with due cause and with reason. But there are some that are taking risk and starting to put money is flowing into riskier assets, which shows that maybe people are anticipating that there's more upside than downside here. And that at least is one little shred of evidence for us to try to make our way back up as we close out this week and start next week. Now, again, I suspect that we make our way higher. I think that from here to next Monday, we want to trade upwards. Maybe not all the way to 153. Maybe it only comes down to 150. But I suspect the next 2 days, I don't think that we roll over today to close. And I think that we probably open and move slightly upwards on Friday. Probably going to be on very low volume because, of course, it's going to be the day after Thanksgiving. A lot of traders are going to take that day off. But I suspect that we drift upwards. And really the case will be made on Monday as to how we're going to really perform, or even it may even be an overnight move Sunday night. But I think then we'll get a clear picture. But I suspect that we make our way upwards a little bit, and then from there we decide whether we roll over or whether we start chugging along and trying to really fight to get to break even on the year. All right, so that's the four major markets. Not a lot of positives, and while there's a lot of negatives, I don't think we have a threat of a rollover from here. Well, I don't want to say that. We do have a threat of a rollover from here to Wednesday. But I think the more likely scenario is that we've seen the volatility that we needed to see, and that we should see some dime volatility at least into the next week or two. Now, again, I could be totally wrong on that. I'm going to be cautious myself, and I'm going to wait till Monday afternoon before I place any other trades. What I have in place right now is what I'm likely to kind of work on, and I don't anticipate taking anything new until Monday. And I think once we get Monday afternoon and we see how we react to Black Friday and Cyber Monday, that'll give me a better clue. And again, those of you that don't want to wait till next Wednesday for my thoughts, if you just follow me again on my Patreon page, I'll post. Obviously, I always post a trade on Monday, a potential trade on like that I'm taking, or even just something to put on my watch list. And from that post, you'll get a good idea of what kind of trades I'm looking at, and what my thoughts are as far as how to go ahead and approach trading that week. So, obviously follow me on Twitter or follow me there, and you'll know what my thoughts are on Monday as far as what I'm thinking about the market and what I'm looking at trading from that respect. All right, let's look at the U.S. dollar, and we'll look at a few crosses, oil, gold, silver, and then we'll move on to the chart requests. I see, Ron, you have a couple. You have DDD and you have Team. If anyone else, we actually have a nice turnout today. If any of you guys have chart requests, feel free to add them, and we can go ahead and take a look at them. Now, the U.S. dollar is actually, despite the fact that it's down from last week, is still sitting in a pretty bullish spot. Now, it is a little bit mixed when we go ahead and investigate the individual crosses that I like to look at. But overall, it's still in a pretty bullish spot. You can see that we have a pretty nice trend going. And while in the short term, it has pulled back since we last looked at it, which was anticipated, overall, it's still setting up nicely. It's not rolling over, and it's not doing anything really negative. Now, if we look at the euro-US dollar cross, we can see that overall, the euro is still struggling versus the US dollar. So this this is inverse, right? So down is good for the US dollar. And if we look at it long term, the euro is actually flirting with a major breakdown here to lose a pretty important level here around 113. And it's trying to stabilize. It's not doing it yet. And I think that there's still potential for a strong move in either direction here. We've got a broadening wedge going, right? And at the moment, we'll see what happens here, how it responds to this level. But this is going to be very important to see what the US dollar does, is how the euro stabilizes or does not stabilize at this level. If the euro can stay above 113 and start to establish a breakout above 114, then we'll finally see a pullback on the US dollar. And that's probably going to be good for us across the board as far as the stock market's concerned and commodities. If the US dollar starts to make its way and push the euro back below 112, that might coincide with further weakness in the markets. But we'll see how that goes and how that plays out. Now, if you look at the US dollar versus the Canadian, again, we're seeing strength, but it's at the top of a channel and probably due for a relief pullback, right? Instead of a relief bounce, a relief drop. It's in a very, very easily and clearly defined channel, right? This is one of those, if you're a day trader or a short-term trader, this is the perfect setup to trade. I mean, there's so many easy trades to take in these sort of scenarios. And it looks like, I mean, ideally it's going to come down and test the bottom of this channel and then continue to make its way back up. But right now, again, it's actually bullish in the intermediate and long term, but in the short term, it's come up into some resistance and looks like it needs to sort of take a break for a bit. And if we look at the US versus the yen, sort of a mixed bag. It's in the middle of a range, right? And I would say this is very neutral and quite the opposite. Not really that great of a trade. It looks bullish right now, right? We've got a couple of little tweezers here, and we're coming up and testing the moving averages, but we are really right smack in the middle of a range. And I think there's just as much potential for a rollover as there is for a move back up. So I'm not actively trading this one right now. I got the move that I wanted out of it a couple of months ago, and I've been just watching it for now. All right. So what does this say for gold and silver with this sort of a mixed bag? The US dollar is still strong, but recently it's been sort of pulling back a bit. You'd expect gold and silver to maybe be holding up and making their way up a little bit, and that's what's been happening over the last week with the US dollar taking a breather. Gold in particular has made its way up a bit. And it's trying to set up for a move. I see, well, Ray was in here. Not Ray Smith, the other Ray. And he's been trying to hope for gold to move up for a while now. Wow, these ads are incredible. And we've got a little bit of sunlight here for the gold bulls, right? A little bit of a breakout today on this nice little channel. And this is I would say this is kind of positive. 115 on GLD is a pretty key level, and it looks like we're trying to break out above it. This is the first real inkling of the possibilities of a bullish trade on GLD and gold in a long, long time. So, you know, that this actually looks decent. Not quite the case on SLV. This is still a mess. It's still way below key resistance levels. It was support, but now resistance. And in the middle of a mess of action. And I would say this doesn't look anywhere near as good as GLD. So if you want to trade precious metals, you're probably better off looking at gold miners than you are silver. And then finally we have oil. And oil actually, I think, is ready for bounce despite this. I mean, this is a horrendous drop. Much, much stronger than anything I anticipated on it. We were looking for a pullback in the 70s, and particularly once we broke this trend line, but I didn't expect it to come all the way down to the 50s. However, we have reached a very key level of what should be support now, which was a strong resistance area for a couple of years, and you can see there's been some strong buying action along these lines around the $54 range. And I suspect that this is going to hold as a bottom. This is not anywhere near a conclusive bottoming formation, but I suspect this is going to hold. And I am looking at some oil names and even just a USO for some potential long plays to set up in the next couple of weeks. I don't know that we're ready for it yet, but I do think that there's a potential bottom on oil that is forming as we speak, just based off of the strength that we're seeing out of today's bullish piercing candle. And in general, this looks to me like a key level for this type of action. So I suspect that we found a bottom here, and there might be some plays to be had in some oil, in the oil space in the next couple of weeks, particularly if we still see the market struggling and we don't find retail to behave well or anything. We may have to start looking at oil and oil names instead of just general market names. But we'll see how that plays out. That might be a theme that we could discuss in more detail next Wednesday, depending on what we see out of the overall markets. All right, so that again is the US dollar and how it's affecting some of the major commodities that I like to look at. Let's move on over to the chart requests. We have a good 25 minutes, and so far I only have 2. So if anyone else has something, oh, there we go, Sam. You've got an oil play, great. All right, so 3D. I haven't really looked at a 3D printer in a while. All right, you're in it. You are slightly red. Is this good support? It looks like pretty good support. Let's look at the weekly. This is the last time I looked at the 3D printers. Yeah, this is a good level. Let's. All right, that's clearly I think a pretty nice support level. Now, is that going to make a difference? Depending on how I draw this trend line, that's a messy trend line. I hesitate to put it there. It could be anything like this. It could be like this. It's probably the most accurate trend line, which is not positive. But I tend to not worry about that much, because a lot of times these trend lines are just meant for the breakout. And then once we break out, we head back to this level. It's got work to do, right? I think you're early. Obviously, I'm assuming you bought this recently and not something you've been holding forever. And if you bought this recently, I think you're early on it, but it's setting up a potential bottoming scenario. Still some work to be done. And this is how I'd watch it. If it can get above this descending trend line, get above the 20, then I think you've got a good move back up to 14 and probably even an attempted gap fill around 1550 or so. After that, I think it's going to have a lot of work to do to get above this level around 16. I don't think it probably gets above that level anytime soon, but you never know. But I think this is a very key level of support. And what you want to see here is a completion of this. This actually looks like a nice capitulation attempt at a bottom. And why I say that is we have this huge gap down on big volume. That was probably earnings. And then we've got a hammer, a nice bullish engulfing candle, and then we've come back and retested on significantly less volume, showing that there's a lot less emotional participation as we come down and retest this level again. So all we need now is the finish of this move, which is to just break this descending trend line and come right back up and test that 14 level. And then from there, it should set up nicely where it starts to make its way upwards. It's probably going to take some action to do it. It can come back and maybe retest 12 and then make its way back up. But I think overall, I would say that you are probably safe here. And obviously, if it rolls back over and it prints new lows, and especially if it loses this hammer, you're probably not in good shape. But as long as it sort of stays in this area and completes this triangle to the upside, then I think that this is going to work out just fine for you. That's like it looks like it's in the secondary stages of completing this bottom, but it obviously hasn't completed the bottom yet. So obviously the way the markets have been, anything can shift on a dime and make new lows. But this to me looks like a bullish scenario. It just hasn't completely played out yet. All right, let's take a look at team. You're in this one, slightly red as well. Is there enough support on this one? All right, so this one I've never really analyzed. It's a pretty strong name. Obviously struggling recently. So it was printing a nice wedge here for a while, and eventually exploded to the upside. And what tends to happen on these big explosions to the upside is they fail. And we've got this, and basically what I'm looking at, by the way, if you guys ever wonder why I draw my trend lines when I'm drawing them, there's a nice bit of action here where we had a transition from the normal sort of contraction of range to an expansion of range, right? You have that big green candle, you have a lot of wicks before that, and I'm going to zoom in to just give you guys an idea again why I analyze these things the way I do, and why, the point behind this. So we were trading in a nice rising wedge, right? And then as we approach this level around 67, you see we have an expansion of range, right? We have all these little candles. We had selling pressure up here at 68 with these 3 wicks, and then eventually we broke out. And then when we came right back down, that's the level that we stabilized at, was right around this level. Again, where we had these 3 wicks here, and then where we had the big expansion in range, right? And that's where we are right now, what we've really tested. So that's why I went and drew that trend line there. That's why I think that horizontal level means something. Because it shows that traders consider this to be a resistance level. They thought, team is not worth 65. Eventually, there was enough consensus to say, yes, it is above 65. And man, this is a $100 stock. And that's when it really took off and made its way almost to 100. And then eventually came back down and they're like, well, it's not 100, but at least it's 55. And so that's the sort of the mindset right now, is that this is a $55 stock, and probably not 100, but at least 55. And now the big question is it worth more than 55? And if it is, then it needs to kind of complete this, right? So now we can go to the daily chart and get a better view of what we're analyzing here. And I would say again, this is a similar scenario to what we were looking at on 3D, but much sloppier in price, like as far as the pattern is concerned. It was the same idea. We had a strong move down on huge volume, and then kind of bounced up, and we've come back and retested that level on less volume, right? So in a lot of respects, this is a very similar play. So I would say at least you're trading pretty consistently as far as what you're looking for, right? Because this is a pretty similar idea and similar pattern, and it's doing a similar thing. It's not quite as clean as 3D, and there's potential for a much more sort of stalled out price action here. But it's the same idea, where we've tested a bottom twice now, this level around 67 to 65, and we need to just complete this pattern. We need to break above this descending trend line. We're trying to get above the 20 today. And if we do that, well, then there's potential for a further move to the upside. But do I think we get back to the upper 90s, lower hundreds, or right around 100? No. I think if we can get back to 80, then I'd be pretty happy with that. And maybe the top of this trend line. But these, not certain that these the remnants of this previous move are going to come into play. Sometimes they do, as you can see here, where we did bounce and come up, and then we sort of failed right around that level and rolled back over. But more than anything, I think the idea here is that if we can establish this as a bottom, we can at least kind of come up and retest the next key level, which is this area here, and then probably just trade sideways and build up steam to get it back above it. So that would be a big target for me, would be 80. If you wanted if you're looking for more, you can certainly hold for more, but I would certainly take partial profits if it got back to that level, as I imagine it would have some serious struggle to get above that, at least in the short term. All right, Sam, you said you traded PSX successfully earlier in the year, so this isn't really a chart request as much as just pointing something. What happened to Phillips 66? Is it gone? Did it get bought out? No, it's there. What did I just pick here? That was a weird PSX. All right. Wow, this doesn't look that good, even though I like like I said, well, I guess it's mimicking oil, right? I mean, it's crashing and then just stabilizing here. Um, yeah, so same as oil, right? Like, look at this massive range. Look how long we spent in a range on Phillips 66. And I guess, relatively speaking, more bullish than oil because it hasn't come down to that level, right? Again, if we look at CL, right? That range, almost identical, but we're actually testing that range already. And with Phillips 66, we're actually above there, right? So slightly bullish and doing all right. Do I see a bottoming pattern in play yet? Not necessarily, because we lost this, right? Obviously, we're still struggling here. And I would, yeah, this is not ready yet. Like I said, I like what I'm seeing out of oil, but I don't know that I'm ready to trade these names yet. But if I could see some kind of a decisive bottom here, then maybe this we can make a play here, right? Back up to 104 and even 110. I could see a target. Now this is an intermediate term target. This is not going to happen in a week, but I could see a target of 109 maybe happening across the span of a month or two. So you never know. Yeah, this is something we could watch with more detail. If I look at oil names, I'll look at this a little bit more in detail and see what happens. But I don't think it's ready yet. Even though I think oil may be bottomed, which means this might have bottomed, but I don't see the candle pattern yet to say that I want to take a trade on this yet. All right, James. Let's look at GameStop. Well, that's a nice candle today. This is another one of these companies that we could look at if traditionally during the holidays they do better, right? Especially during Black Friday, and you know it's a retailer that should do better. Some of the bigger companies that I like to look at, Activision and EA, and even Take-Two, have done very, very poorly. I was not anticipating this at all. This is a name that I was actually kind of bullish into the holidays and completely just broke down. I mean, a disaster, right? And EA, same thing, disaster, right? Take-Two, not quite the disaster, but pretty ugly. And this is on the heels of pretty successful launches of their titles, right? Of some of their games. So overall, surprised that GameStop actually hasn't done quite as poorly. Now again, they're not necessarily always that strongly correlated with these companies, but yeah, interesting. All right, so it just shot up from 12 to 14. Oh, so you were just pointing it out, but I don't know what to make of this. Did that just happen like right now? Yeah. Okay. So you're just bringing up news. I don't know. It's GameStop to sell Spring Mobile. I guess is this the news that came out? Maybe that just happened. Yeah, that's interesting. Now I will say this: they're at support, or they were before that big move. I mean, I maybe it's that headline that just came. Maybe this headline just came out, and that's what it is. 14 minutes ago, yeah, that has to be what it is. So that's a nice little news pop. I don't know how much. I'm not a fundamental guy, so I don't know how much that really helps them or what it's going to do for them. I will say that it's it's fading as we speak. The move is fading, right? And at the very least, it probably establishes this as a bottom, this 1250, and 1450 as a near-term top, which makes sense based off of this chart, right? You've got this, and then you've got sort of this area here, right? Which you could draw a couple different ways, but I mean, if it comes down all the way back to, you can maybe take a play on this, hoping that it fills this wick again. But yeah, this is a nice little news pop, but I don't know. I don't know the significance of that, like how important that news really is. Yeah. All right. Well, I don't know if we have anything else to cover. If anyone else has another chart request, I think that kind of covers it for me. Like I said with the market, it's not a pretty market. One thing I've been doing, I mentioned this yesterday, again on the Patreon page, that, and I did this as a subscriber post, but most of you guys are regulars, and a few of you guys are on my are actually subscribers already. These are good times to look at, and we discussed this last week with Tandem, right? Or what Sam just brought up with Phillips 66. These are the kind of times when the market is in a messy situation like this. Throughout the year, there were names that you probably looked at like, man, I can't believe I missed that name. I really wanted to get that trade, or I really wanted to buy that, and I never got a chance. And this is a good chance for us to look at some of those names again and revisit them. So last Wednesday, we discussed Tandem, right, as one of the names that that Ray, who's back in here, had pointed out, which had a strong move. And then recently, it's really struggled, not necessarily pulling back and breaking down. You can see, even in a strong market correction, this thing is mostly traded sideways. And it's in the process of establishing a bottom here. Is it at a spot where I'd recommend to buy? Probably not yet, although aggressive traders could have bought yesterday and could have even bought today based off of support at 32 and this ancillary support around 25. But ideally, you'd want to buy it after it breaks out of this triangle. But a name that I brought up yesterday, again, it was for subscribers, but I'll go ahead and share with you guys. It's already a day older. Is Canopy Growth. These wheat stocks. We've looked at these names in detail throughout the Wednesday webinars this year, and it had come back and retested a level. And what I want to point out is not necessarily to trade Tandem or to trade CGC, but to look at names that maybe you missed out, that you're like, oh, I can't believe I missed that trade. Just start looking through all your old watch lists, and just build a watch list of names that are coming into support levels that you maybe thought they were never going to hit again. I mean, even names like Apple, right? Apple and Amazon, Netflix, which are doing just very, very poorly right now, but they're reaching levels where a year from now, 2 years from now, you might be telling yourself, man, I can't believe I didn't buy at that level, right? If we go back to Apple, you look at it on a weekly chart, and throughout this year, you might have been like, oh man, I can't believe it's a 200. I wish I would have bought it back when it was trading in the 170s or the 160s. Well, keep an eye on these names, right? Because they're coming up to these levels where you might think, well, there's still room for the downside, and there is, but it could be that this ends up being one of those opportunities that you kick yourself for not taking a year from now, right? So this is a good time to start really looking at names that you think you could get good value on for longer term holds. And things don't look great right now, but you never know how we resolve the end of the year. So I would say to start watching for bottoming patterns on a lot of these names that are looking pretty ugly, because sooner or later they will bottom out, whether it's now, whether it's in another week, whether it's in another month. But they will sooner or later bottom out, and they will give us, and even Apple right now, I would not buy this right now, but it is coming up into a pretty interesting level here that was resistance and could be turning out into some support, right? And this is where you should start looking for bottoming patterns, and take smaller positions that you can hold for longer amounts of time. Ray, you're saying another, and James, we'll look at your last two in a second. Aurora as another one. Yeah, Aurora, or even I had also pointed out Tilray as another one. A few of these marijuana stocks that maybe we felt like we missed out on, they might be coming back into places where we could go ahead and play them. And so more than anything, I don't want to turn it into a thing about saying just buy marijuana stocks now, but keep an eye on names that maybe you missed out on throughout the last couple of years that you felt like, oh, if only I would have bought it at this price, I'd be happy. Well, you might get that price now, right? So keep an eye out and start looking for some, okay? All right, so the last one we'll look at is we'll look at DocuSign, and we'll look at LB. And all right, so this one IPO'd earlier this year, and it's basically at the IPO range, right? So and what I like to do with these stocks is you look at the range that it spent on the IPO day and the week, right? And for the most part, it spent its time. Now, yeah, we can put the wicks and say it was this, and it doesn't really make that much of a difference for analysis. But I'm just going to go ahead and tighten it up a little bit and say it was that was the meat of the candle on the first day, and actually of the first week, right? Because we sort of spent the week there. So it opened up as a $38, $39 stock, shot up all the way up to the 60s, came down. Obviously, this is a key level here, around 50, 51. And then eventually rolled over and came right back down and actually has tested this level on 3 separate occasions, with one of them being a pretty drastic breakdown, which it came back above today. So on the bright side, yesterday's candle and today's should have established 38, 39 as a floor, right? So this is probably worth a buy, even here at 40. Now, granted, you're buying at 40. Depending on where you put your stop, your risk reward's not that fantastic unless you're looking for a move back to 50. You got about 10 points of upside, and depending on how you stop out, either 3 points or 5 points of downside, right? And that's assuming you're going all the way back to 50, which might take a long time to get to, right? So I don't know that the risk reward is here yet on this, but I will say that it looks like it established 39 as a bottom just based off of today's candle pattern and how quickly it came back up after breaking down below that IPO range. Now, again, it is not necessarily a positive sign that it printed new all-time lows just yesterday, but I do like the way it responded so quickly in a bullish manner. And this could still set up a better risk-reward opportunity if it sort of contracts in range and just sort of chops around a bit, and then maybe you get a better risk-reward play off of it, okay? And then L Brands, is that right? Is that, yeah, all right. So, what is it? It's an apparel company. Is this Lucky? No, right? Maybe it is. Is this Lucky?
No, Rob. No, Rob. That's L Brands is Victoria's Secrets and.
Oh, okay. Thank you, Frank.
All of those.
Oh yeah, Frank knows his Victoria's Secrets. I don't like this. I mean, again, the theme that retail should do better into the holidays could help out, right? And we've got a massive gap down on high volume, followed by a nice bullish piercing candle today. This could bottom out. This is another one. Maybe look into it next Monday and see what happens. And it could set up for a retail bounce, but man, it's not looking pretty right now. We just had this gap down. I can't even really draw this channel like this. I could draw this. Let's do this. Yeah, this is not looking. I don't know. I don't like it. I don't like it at all. It could do well into the holidays, but does that make it a good trade right now? Not to me. It's below 2 pretty key resistance levels now, and below the 50, below the 20, the 200. It's got a lot of work to do to rally into the holidays. I'm not excited about this right now. It could set up better, and I do want to point something out. I guess a closing thought. Just because the stock goes up doesn't necessarily make it a good trade, right? In order for it to be a good trade, it has to give us the qualities that we're looking for, which is the things we can control, which is the risk reward, where we want to stop out. We can't really control anything about a stock except where we enter and where we decide to exit. We can't decide whether it goes up or down, even how fast it moves. All we can do is decide how much we want to risk on a trade. And even then, sometimes that decision is taken out of our hands with overnight moves, right? So predicting that a stock goes up doesn't necessarily make it a good trade. And this could go up into the holidays. But is it a good trade right now? I would say no, because with respect to where it's at from a technical perspective, there's when a stock breaks these key levels, it can really break to the downside a lot faster than it can to the upside. So I don't like this one too much, and it could go up, but I think I'd probably find better ideas here than this. Okay. All right, guys. I want to thank you for your participation. Again, it's a week where we want to be a little bit safer, and at this point, just enjoy the break, right? Enjoy Thanksgiving, or if you don't celebrate Thanksgiving, enjoy the day off from the markets. Enjoy the time with your family, and we will meet again next Wednesday.
Have a happy Thanksgiving, Rob, and
thank you, Frank.
everybody else out there.
All right, guys.